Welcome to the February 28th, 2022 Advance Report from McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. This is why you subscribe to YouTube McGowanGroup. When there's fast-breaking news that impacts the financial markets, we're going to break it down for you with the headlines. And I'm also president, McGowanGroup Asset Management, a team of 10, the team that cares, serving clients from the Crescent in Dallas across the nation. And we are actually the team that can help you navigate, especially when the markets are quaking. How did we gain advantage this week? And what's ahead for 2022 after the brutal invasion of Ukraine that shocked the world Wednesday night and Thursday morning? I'm going to cover the market impacts and the perspective, acknowledging that what Vladimir Putin did as a megalomaniac is cruel, and it shows that the world is not actually as safe a place as we thought. Those shock waves hit the financial markets Thursday morning. This is the Dow Jones Industrial year to date. This is the January correction. This is the impact on Thursday morning. The Dow fell below 32,300. The NASDAQ, we'll get to in a second, was actually worse, but that was mitigated by the end of the week. The Dow actually touching 34,000 on Friday, which was a level that it had reached a couple of times before. So the question being, what is the impact on the United States? I've got updated GDP figures, and we're going to go through that as well. This has been a bear market for technology. It's a bigger bear market for the Russian index. Russia's isolation is the conclusion from what's happened this week. And you can see it in their stock market, down at one point by about half. And they rebounded a little bit at the end of the week, but owning Russian stocks obviously taboo with the cruelty that Vladimir Putin has shown. The ruble actually fell 74 to the dollar to 90 to the dollar, and that's one of its lowest levels in history. So the isolation of Russia is the conclusion. Now, Moldova and Belarus are the other two non-NATO members adjacent on that map. But he's going to have his hands full with 2/3 of the population of Ukraine actually loyal to Ukrainian independence. Russia's been trying to control Ukraine for 400 years, all the way back to Catherine the Great. In this case, the NASDAQ, what you saw, we go back, this is year to date, but if you go back to November, at the low point, the NASDAQ down, this is NASDAQ 100, the top 100 stocks, mostly technology, down 23%, fulfilling a full-fledged bear market on trading Thursday morning. Now the NASDAQ 100 down about 14% for the year, versus an S&P that is about a -8% for the year. In some respects, it appears to be a normal, healthy correction in the equity markets, which did get overheated last year, especially the technology field. What's up year to date? You can see the pipelines maintain an 11.4% gain for the year. That's the energy infrastructure. Many of the exploration companies are actually much bigger gains, and we'll get to oil here in a second. This is the top 10, bottom 10 over the last 90 days. Now, I shifted this from weekly to every 90 days. In the S&P 500, the largest 500 companies, exactly who is up the most year to date? A couple of things have happened in the past week I want to note. Value stocks is the message that the markets are sending with money flow right now. And you can see in the top 10, AbbVie with a 27% gain for the year, and other medical dividends are actually up for the year. Vertex Pharmaceuticals is a 24% gain. So value medical appears to be leading, whereas the healthcare index is down about like the S&P. in part because companies like Moderna that are COVID dependent are actually correcting from their monumental highs. Moderna down 44%. You can see they split that market. Those with the Omicron cases coming down so dramatically, forecasting reopening, especially here at springtime, that says that anything that was COVID dependent is actually more vulnerable. The other thing is the stay-at-home stocks. If you're going to sit at home and work from home, well, you might buy something on Etsy, which is down 51%, spend more time on Facebook, which is down about 38%, and you might watch some Netflix when your boss isn't bothering you if you're working from home. Some of my team members might have done that. Minus 41% so far this year. That says you've really had a huge shift in the leadership. But noting at the top of the food chain, Marathon Oil up 28%, Halliburton Energy Field Services up 35%. Yeah, you can see those trends in the top 10, bottom 10. And we'll bring them to you each week as that changes. Now, what's the impact on global GDP? Well, Ukraine is about a $150 billion economy, $150 billion in production per year is the GDP. To put it in perspective, Texas with less population, Ukraine 44 million, Texas approaching 30 million. Texas is about 500 billion GDP, to put it in comparison. So if we take the GDP impact on the United States, this is updated by the Bloomberg Economist this week. Real GDP revised upwards to 7% for the last quarter of 2021. First quarter here, it says GDP growth is actually expected to slow to just 1.6% annualized. Wow, that's a slowing growth. 3.8%, 3, 2.5%, 2.3 by the end of the year. So slowing growth is a theme that we'll talk about. First quarter here, it may be supply chain disruptions that keep that forecast so low. We'll keep you posted on that. Here you've got crude oil. So one of the impacts on Thursday was oil hitting $100 a barrel. Went just over 100, settled back to just above $91 by the end of the week. So you see the big spike, and then it settled back down more to this trading range trend line, but it defines a new high, if you will, for oil in this particular cycle. And what does that mean for global energy? With the reopening forecast by the drop in Omicron cases, what you actually get from this is record demand for jet fuel and the other components. Obviously, the natural gas, when the German chancellor said that he's canceling the Nord Stream, he's not going to approve it, that says Qatar and the United States are likely to provide that liquid natural gas, and that's more flow through the pipelines and the existing infrastructure. And you could see it at the week trading on Friday. I'm Spencer McGowan, President, McGowanGroup Asset Management, your financial weatherman. Weeks like this are why you subscribe to YouTube McGowanGroup. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.